Goldman just told you something most retail traders will miss. Gold's upside calls are sitting at the 5th percentile of their 10-year history. That means buying calls on gold today is as cheap as it has been in a decade. The options market is asleep at the wheel. And here is why that matters this morning. Gold gapped up 3.5%. GLD opened above $400. Gold futures crossed 4,300. The metal that everyone was selling on Wednesday's hot CPI print just printed its biggest single-day gain in months. Here is what it looks like in chart form. The yellow line is GLD over the last month. The two dashed lines are a 622, 385, 390 call spread. On Wednesday, the CPI sold gold down to 375. Friday, it climbed back to 386. This morning, it gapped through 390. A trade that looked uncertain 4 days ago is now fully maxed out. Three things drove this overnight. First, Trump announced the Iran ceasefire is being formally extended. Second, the new Fed chair, Kevin Warsh, is widely expected to lean toward rate cuts at Wednesday's meeting. And third, the dollar weakened across the curve as real yields gave back last week's spike. Each of those three things pulls gold higher. They are stacking. Here is the line in Goldman's weekend note that most people will skim past. Quote, "Gold call skew sits at 10-year lows. Long delta risk reversals or ratio call spreads look attractive." End quote. Translation: the smart money is still buying upside in gold. They are not chasing the spot price. They are buying the optionality. So what to watch this week? Wednesday at 2 p.m. Eastern, Kevin Warsh holds his first FOMC press conference as chair. If he leans toward cuts, gold extends. If he holds a hawkish line, the dollar bounces and gold cools. But here's the thing. Even if it cools, Goldman says upside calls are too cheap to ignore. The trade is no longer about tomorrow's print. It is about owning convexity into a regime change. Daily synthesis of what the big banks and Wall Street quants are seeing. Follow.